Hey guys, this is Dr. Greg McLeod from Elite Traders University, and today we're going to start Bulls versus Bears weekly Forex forecast. So glad to be with you here on this wonderful Saturday evening. I hope all is well with you and your loved ones. And we are going to go in a deep dive into what's going on in the financial markets for trading for the week beginning November 17th, 2024. And so it's going to be pretty exciting. We just got past some tame inflation data. We've had Bitcoin at new highs. We've had the rally, the post-election rally continues. As we go into a week before Thanksgiving, and so let's go ahead and dive into it. Let me go ahead and share my screen and let's get to it. And what my purpose here is to help you as a trader look for profitable opportunities in the market, being able to forecast, looking at different economic data, looking at support and resistance. We're going to look at technical levels. We're going to look at the indices. We're going to look at Forex, but we're going to give you a resource that you can look back over and over again to give you a roadmap to the markets. Okay, so stay with me. I'll make sure you like, subscribe, and share this video if you find it helpful, and also write in the comments what you'd like to see next. Okay, let's get to it. And share screen two. All right, and let's do it. Boom. All right. This is brought to you by Elite Traders University, and we're going to, this is weekly Forex forecast, Bulls versus Bears. I'm going to direct your attention to the risk disclosure on your screen to make sure you understand all risks associated foreign exchange trading. I had a Series 3 license. I worked for a Forex broker dealer, one of the world's largest Forex broker dealers in the world. And so I still do compliance type of stuff. Okay. So I'm a founding member or the founder of Elite Traders University, and I'm a 30-year trading veteran. I need to change that slide. And so I'm one of the foremost authorities of short-term day trading called scalping, being a Wall Street insider and a currency strategist and analyst. My the systems and my analysis have been in high demand around the world. So you're at the right place to learn about the markets, okay? And if you want to find out how to work with me, go ahead and click the link in the description. And if you're struggling with your trading, let's talk. I can talk to you, listen to what your problems are, see if we can find a little solution for you. And if you want to work with me after that, then go ahead and we can talk about that later. All right, cool. All right, let's go ahead. Oh, yeah. Um, I wrote this book about on gold. I projected a $5,000 or $3,000 price target, and so I have a really cool book I wrote. You can scan the QR code, and there's special discounts on that. The Gold Rush Blueprint is what I wrote. You can go to bit.ly/Gold Rush Blueprint if you're interested in that wonderful book on with 3 different systems on trading gold. Okay. And their agenda, we're going to look at the dollar index, euro dollar, pound dollar, Aussie dollar, dollar yen. We're going to look at some of the indices, and we're going to look at some of the commodities as well. Okay. So I'll go to my screen here, right? Oh, right. And we're going to go to my market heat map, which is an arrangement of currency pairs by percentage change. It tells us what's hopping, what's popping, what's dropping, and what's not in the market. And it's an app that I had built. And when the markets are open, these tiles flash colors, and green is up, red is down, gray stay away. Right now it's gray, so we're staying away. But also in the front, you can access the Forex majors for free on the front page at mymarketheatmap.com, right? But you're also going to access the free economic calendar as well. We're going to start with the economic data for the upcoming week. That way we can have a pretty good idea of where the technicals are going to be as well. When they line up those technicals and the fundamentals line up, that provides really powerful opportunities to trade in the market. So I know an economic calendar may be a little boring, but stay with me because it's going to all make sense, because all I'm going to look is the flag. People tell me the biggest problem they have is knowing what to trade. I tell you what, if you look at the flag, they'll tell you what to trade. For instance, Monday, November 18th, we have the Australian flag. They have an RBA minutes meeting. The Australian dollar will probably be in play. And then on Tuesday, we have the Euro flag. CPI, anytime you see I, it's going to be inflation. So it's consumer price index, but you're going to talk about inflation. And then the inflation rate year on year is going to be looking at to rise, and core inflation rate year on year. So um, I'm not really looking at the numbers. I'm looking at this is telling me what I want to trade. I want to trade the euro. Why? Because the big boy is going to be trading it, and I want to some market volatility, and probably not going to be any volatility in some other currency that's not tied to the euro. And then we're going to have lots of Canadian data coming out: CPI, inflation rate, core inflation rate, um, a number of things. Even though they'll say these numbers don't really matter, what matters is that we know what to use our technicals to find precise entries in the direction of the trend that settles out. Usually, news goes counter trend to the trade, and then you can use your technicals to get back in trend. And I have a really great video of that. Oh, I haven't even uploaded that video yet. Just remember that the 5 ways to and the 5 steps to analyzing your charts for fun and profit. Okay, so look for that video. Okay, awesome. Wednesday, we're going to have lots of UK data. We're going to have some Japanese data point there. We're going to have balance of trade. Wednesday, we're going to have the core inflation out of the UK, the pound yen, pound Swiss, pound Kiwi. All will be in play on Wednesday, November 20th at 2 a.m. Eastern time. So if you're up in this part of the world in the US, it's 2 a.m. It may be a little later, or maybe a little earlier for those in other parts of the world. Okay. November 21st, we have initial jobless claims, a volatile number that changes weekly. And then we have inflation rate of Japan, a GDP growth rate. And then we have lots of, so we have the German flag. We're not trading the German currency. Germany is part of the Eurozone. And Germany has experienced a lot of negative, their government is kind of in disarray, their economy is in disarray, and they're the strongest economy in the Eurozone. And if they're having problems, then the whole Eurozone is going to be impacted. So the euro could continue its step down lower against the US dollar. And against a lot of other currencies, the euro may be pretty weak, except for the yen. The yen, it's going into Christmas time, and we all know that the yen gets weak so they can sell more Sony PlayStations and Lexuses to the rest of the world cheap by devaluing their currency. They're not currency manipulators because we created their system, so they're just taking advantage of it. And then we have retail sales out of the UK, 0.3, negative 0.3. Again, there's not, these are very small changes. All we want to do is look at the flag and say, okay, this is what I want to trade. Don't trade the news exactly when it releases. Wait for about a half hour to an hour. I suggest wait an hour, right? It's almost like, you eat a big meal, bunch of spaghetti and pasta, and then you lay down, and then you have indigestion all night, acid coming up like the aliens burning. Acid, right? You got to take like 4 or 5 Tums behind it. And instead, you wait until the food digests, go for a walk, and then when the food digests, then you lay down and you have a great sleep because you waited until the food digested. So you have to wait. This news comes out. It's like a giant submarine sandwich full of like garlic and hot peppers and chili and cheese. And the market has to digest it, right? It's gonna barf it up, it's gonna go down, it's gonna come out both ends. You see those Darth Maul candles, long wick up, long wick down. It's coming out of both sides, right? But you gotta let it settle down and wait and then it decides what direction it wants to go. So you wait an hour after the news. Okay, don't try to jump in there. There's like a bunch of feeding piranhas in there at the initial release of the news. Okay, so that's a pro tip there, right? So we got UK retail sales coming up Friday, and that's the 22nd. And we have Thanksgiving. Thanksgiving comes in around here sometime, right? I gotta check the calendar here. Hmm. The 21st, right? 28th next week. Thanksgiving. Okay. Cool. Okay. Then you can click these and there's like charts and things like that. All I want to do is see where the what's going on, right? Here is Friday, November 22nd. We also have lots of US data. Now, for the US data, I actually like trading the euro. The euro is considered the anti-dollar. We're going to take a look at that next, because we're going to look at we're going to trading view and actually take a look at the US dollar. That ends our fundamental stuff. We got that out of the way, right? We got a little understanding what's going on, right? So now let's look at some charts, right? I want to actually, I'm gonna go to the indices. I know you guys want to talk about indices and stuff like that, and ES and YM and all that, the NQ and all that other good stuff. But I'm gonna start, currency show. We're gonna start with the currencies first, right? So let's go ahead and we're gonna start with the U.S. dollar index. The US dollar is the reserve currency of the world, and 85% of all transactions occur with the US dollar, usually US dollar and the euro, right? So it's the reserve currency of the world, right? It's the reserve currency of the world, right? It's the reserve currency of the world. And let's go up. US dollar index, US dollar index right there. Boom. Oh, and we've got all kinds of stuff going on here, right? Let's go single chart, get rid of all this stuff, all the squiggly lines. All we really want to do is find the trend direction. Let me get this thing out of the way. I got this out of this way. Get this out of the way too. And I'll just leave the 200 moving average. And I want to start with a monthly chart. I want to start with a big higher time frame. I want to be, look at 50,000 foot overview. And we can see that wants to come back, right? 50,000 foot overview. Here we go. We have a big, big, big uh, uptrend in the US dollar, from the lows that we had here. Just, it's demand line. It's a uptrend. And we've found some support uh, recently. And I think we might see a reignition of inflation, maybe, because the dollar seems to be gaining some ground. We were looking for maybe a head and shoulders and a drop, but now we have multiple bottoms at the 116 area, and we could possibly we're in a range. We're stuck in a big range. The first level is the 107.33 area, and the next range is here. Now, really, this is really interesting because normally this time of the year, the dollar gets weak and the other currencies get strong. The euro, with all the problems happening in Germany, that's off the table. With the U.S. election and Donald Trump and being more tariffs and things like that, and that's boosting the dollar, strength of the dollar. People want dollars so they can get into the U.S. stock market. So they're exchanging their currencies for dollars, and central banks around the world are trying to stock up on dollars because if it keeps going higher, then they won't be able to. They'll be priced out of the market. Remember, a lot of trade happens in the dollar or the reserve currency. If you don't have enough of those dollar tokens, then you're going to have to pay more for them later on. So they are becoming more expensive here on the monthly chart. You can see, and you can see strong uptrend. Now, this is in contrary to what's going on with the euro. The euro is going straight down. We'll see it's a mirror image of the other fact. We can compare these two. We can put the DXY and we can put the EURUSD against it, and we will see that we have basically a mirror image of each other. Remember, the euro is the anti-dollar. This red line is the euro, and it's going down. Now we've got some resistance here, but we could see a break of this area here, and we can see a move higher. And I'll probably have to get rid of the euro in order to get that number for you. Boom. Okay. Yeah. So we hit that 107.35 area. We break this. We have lots of empty space till we get the next demand or supply zone. Our supply zone comes in right in this area here, about the 113 to 112 area right there. Maybe a little bit bigger than that, like that. And that's overhead supply, but it's far away. There's space, all the space in here, right? So we break above these highs, and this thing gap. Treat this like a gap, and so we usually price returns to fill the gap, right? We have symmetry. I was showing my students about symmetry, about the Yeah, the Valentine heart, you fold it in half and unfold it, and whatever happens on one side happens on the other, and that's called symmetry. So we set the same movement we had on the downside, we could see the same movement, the same direction and fill on the upside, right? So this will be green because we are moving up, moving on up like George and Wheezy. So we will see a movement to fill this area, right? And that leaves a lot of upside for the dollar currencies, dollar yen, dollar CAD, dollar Swiss, um, but much more pain for euro dollar, pound dollar, Aussie dollar, right? So it's a very simple kind of a binary event going on. Daily chart got a little bit of a pause there, and then just straight, just total movement to the upside, and we've got some more space there, 106 to 107. That's 100 pips right there. And it was a little bit of a pullback. We found a pullback in that, and that's our pullback. We got a pullback right here. And so maybe on the 106.72 to 107.33, that's like 61 pips. There's a 61 pip profit potential right there for a possible trade long. I'm sorry, we can't trade the US dollar index, so we have to, hey, let's switch it on to something we can trade. Let's go to the euro. The euro is my hero. EURUSD, right? MOUSE, boom, up. And you can see a sled ride straight down. And this is our euro. And we can see this is a monthly chart. And we can see after topping out at 112, double top, double top to the drop target would be like 104.41. And we're at we're kind of close to that. Weekly, here's a weekly chart, right? So we have old level of support. We have a pretty good range right there. Downward downtrend supply line, like that red. So we've got rallied up, drop. There's support right there. So prices or traders are very cautious as we hit old levels of support that were previously tested because we don't know, it might get a bounce. And if we do, then, it's like driving a car. There's a brick wall there. You want to drive through that? Maybe you can drive through it. I remember seeing a movie where the guys were trying to escape and they were in a car and they saw a chain link fence and they said, put this floor, this floor. And usually, in the movies, the chain breaks and they escape. No, this time they ran into the chain link fence and it stopped, right? and and didn't have enough power to break through the chain link fence, and they were caught. So it can happen like that, right? It could be life like that. So that's an area of support. It looks like it tagged and buyers pulled back. We got to know a daily chart to see exactly. So it's like right there, 104, 104, 10, no, 105. Sorry, 105, 105.43. I got my numbers transposed. Okay. It's like 100 pips or so. But here we go. We got a nice little rebound there, and price could come on down. Come on down, like Bob Barker. It's the price is right. Come on down. So we're looking for a tag of that support. That's a support at least. At least if we get down there. If it breaks through, then there's a lot more to go. Break on through to the other side. Break on through. So if we get break on through, then we've got, we got to go back to the weekly to see that. They'll see that. We have this area here. And looking at the US dollar index and everything that's going on, we could get down to this 95 retest of this low, the low of October 2022, which is untested. There's no other low. This doesn't go back very far. You probably need to get someone who has more data. There we go. Now, this is kind of suspicious because it kind of looks like an inverted head and shoulders, kind of like a Quasimodo, Hunchback of Notre Dame kind of thing. It's got little shoulders like going, Igor. No, there's the line right there. See that line? It goes back to years, it goes back to 2015, where we hit this area before. And people just, price has a memory. I remember back in 2015, I tried to short that thing and I got stopped out when it went the other direction, right? And they tell that story and they tell another story, and everybody's got alarms on their computers, and the robots and the bots have memories too. So when we come to this area, well, guess what? There was rejection right there, right? But I tell you what, on the trend line break after the 200 simple moving average, this was a perfect target to hit. People say, well, how do I find price targets? How do you find price targets? Look left. Where it stopped last time is probably where it's going to stop again. Um, Now the next target again would be this down here, down this 95.67, right? But we got to break through. I mean, we have to have enough momentum, and usually the price returns back to the scene of the crime. It comes back, and then it breaks out a little bit, comes back and retests, and then gets that drop. So um, I would want to be a hero and try to jump in front of this, right? But we go down to smaller time frames. We could probably, there you go. There's still a goodly amount of pippage between. We are very close to an old level of support. You can see where we tagged. That was probably our destination, which is, about 40 pips away. It's about 40 pips, and it could be a good entry. Okay, so I kind of beat the euro up a little bit. Bulls versus Bears. I am bearish, bearish the euro, right? Okay, GDP USD, and they're all gonna be the same pretty much. I mean, look at this. It's breaking level, breaking level, breaking levels. It's breaking bad. It's just breaking bad, breaking these levels. But we're in the same kind of thing here, right? This area here was tagged numerous times, and then you got rebound. But we're getting the rebound off of, I mean, this rebound, and then it went up a little higher, but it's these lower highs with like a descending triangle, which is pretty bearish because it's making lower highs, but the same low. So this is called a descending triangle, and it's a very bearish pattern, especially if we get this long wick there. So we could come back and retest this low, and that would be really nice for a nice trend trade like this one. That's a nice meaty move. We need a trend line break and maybe a retest. Let it come on down and come on, almost like a pullback and an extension, a retest of the trend line, right? But let's just drop it down to weekly chart. And I mean, these levels are, I mean, this is a weekly chart, and these levels are huge, right? This is the 200 simple moving average. Above it was bullish. We're closing below it. It's bearish. And we have several areas here. We're currently at the 126.16 area. We tested the 125.94, but we have a support coming at 24.13, and major support comes in at 21.60. It's 300 pips away. 300 pips. If the dollar continues its strength, we could see the pound continue to lose, right? And to make it great. So Bulls versus Bears. I am bearish. I'm pretty bearish on the pound, okay? AUD, USD, they're all gonna be the same, right? So I'm not gonna go through those. If it has USD in the back, it's gonna get thrashed, okay? That thrash is a technical term, right? So let's go. I'm gonna go right to gold, XAU USD. My students have been crushing gold, crushing, 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 like you just wouldn't believe, right? Um, I have Jeff. Jeff has been crushing it over here in our stage 4 funded traders chat, right? And he's just been just day after day after day after day, win, 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 right? And he does this quite often, right? And then our stage 2 people are our demo people, and we've had several people who have doubled their accounts, which is pretty cool. They've doubled. Rudy has doubled his account 154%. And then here's Bill has doubled his demo. He started with 100K, and he doubled his account as well. Lots of wins there. We give a certificate of completion. Kenneth doubled his account as well. And we have yeah. The, so what he had 86% profitable, right? Which is cool. And then we had Chris has a MyFX book. He just got started in stage two. 5% for the day, not bad for a day of trading, which is very cool indeed. So, um, yeah, if you're interested in mentorship, if you want to, be able to work, with people, our students, we have, we use analytics to actually look at how you're trading in your simulation trading, so we can make adjustments and things like that before you go live. Usually what practice makes permanent. We used to the old saying practice makes perfect, but actually practice makes permanent. And because if you practice the wrong thing, it becomes permanent, right? You start doing stuff wrong. But we try to, get you on the right path, right? Okay. So anyway, enough of that. So let's go ahead and go to gold. Uh oh, gold. Gold in their hills. Again, the currencies, dollar is strong like bull. So we'll look at the XAU USD and look at gold. Okay. And so gold, monthly chart looks great, you know, very just higher highs, higher lows, nice break out of a channel of, back here. I mean, the 2000s were a long time ago, right? And you went right into the 28th century, right? 2800. But we've been hanging around there a bit, month, 2 months, month wick weeks. That's where we're getting our pullback, right? Where the trend is still up. However, the intermediate and short term trends are down, and so a lot of traders have been taking these to the short side. And no, be careful because we could be running out of been shorting it for a while, and we shorted from the major swing that we had back here. Our major swing was on June 3rd, 2024, at the $2,259 level, and we rallied all the way up to a high of about 27.89. Our pullback to the 38% retracement was at a little bit below that. We actually hit the 50% retracement, about 25, 29, 21. And look, price, this is a full body red candle. Buyers stepped in, pushed prices back up, rejected, right? So that is pretty, that's a reversal. So, the people that took the shorts, been on the short ride, the short train, the short bus, they're going short, but they got rejected here. So let's take a look on the daily chart. You can see how it played out, right? Big correction down to the 38% retracement and then down to the 50. We looked at a 4-hour chart and you can see that we were lazy river, a nice lazy river down here. And, I'm sure guys are trying to get short, try to do it again, and they'll get burned because their stops are going to be here. They got enough people complacent on the short side. And what we could see is prices, reversing on them because we are in a uptrend, right? Uptrend that we're having a correction against that trend. This correction has lasted till several days. We've been reversing since the end of October, right? So, end of October, we're like 18, 20 days to for a reversal, a retracement, right? Not a reversal in trend, but a retracement. We'll probably never see the 2000s again in gold, unless they replace the dollar for Bitcoin or something like that, right? So we have a trend channel, and that trend channel, if it breaks above, we can get above 2613, this old swing high back here. We could see our move back up to the 2700 area. I would be constructively looking at long. So short term, I'm bearish, but medium term, long term, I'm a gold bull, right? All right. So we took a look at gold, and it's really because the dollar is strong too. That, I mean, this is all also due to some dollar strength, and we broke the 200. So it'll be very interesting to see if gold has overcome dollar strength before, but if the dollar continues to persist, well, maybe the 618 comes into play, right? We could, we could continue the trend. The trend is your friend until we break highs. There's no structure change, so we remain short, right? We keep short in the medium term, but long term, right? Intermediate term, it's short. Long term bull, but long term hasn't kicked in yet, so we're not we. You can lose money trading the long term, right? And that's not what we want to do. All right. So that's gold. Let's go ahead and take a look at I want to take a look at oil, right? US oil. And I really want to take a look at oil because you know, if we start getting, drill baby drill, the Trump administration is talking about energy independence, lots of fracking. The spotted owl is is curtains for the spotted owl, right? Coming to your national forest near you, drill baby drill, right? Um, Energy independence means that there's a lot of oil here, and there's more supply and demand, guys. The more supply you have, the lower the price of oil goes. Remember, we went negative on oil. We went negative price. Can you imagine? It costs more to keep it. It's cheaper to keep it, right? Not for oil, because the storage costs more than it costs getting out of the ground. So we actually had negative values for oil. In fact, if you saw the YouTube video where this kid took $200 and he turned it to like $200,000 in oil, I think it was 2,000 to 200,000. He caught that wick and he took it back up, right? And of course, it never happened again, right? But we could see a similar move. Remember, I told you about that symmetry thing, right? I hope you don't, rewind it if you didn't see it. We got this big move up to the upside, right? But what happens on one side of the equation, if you don't remember algebra, because you ditched or you fell asleep, you're maybe not that good at math. Well, you're not that good at math because you were like, playing with your video games or looking at your phone or something, right? So what happens on this side, thrusting up, we can see to the south side thrusting down, right? And if they keep drilling, that oil is going to get cheaper. And then, so what we can do is we can position ourselves shorting oil. So bulls versus bears, I'm shorting oil, right? We got a little bit of support here. That 65.19 price goes down. And thank God, I was in California, guys. I drove there for a reunion. It was my 40th high school reunion. I know, doesn't look great, but I got some gas, and it was $5.91 a gallon. And I'm like going, look out, I'm coming to join you. He's like, I'm doing Red Fox. It was horrible. It was like $91 to fill up my tank. And it was like the highest gas. I still have that gas in my tank right now. And that was over the weekend. I'm like going, yeah, I'm not going to go anywhere because that gas, I'll make that gas last. No. But here in Nevada, the gas is a little bit cheaper. Texas is where it's at, guys. It's still in the twos. It's still in the twos. My daughter's like going, oh, it's 231 over here. I'm like going, oh my God, really? Um, and she goes, "Is a reason to come back to Texas?" I'm like, yeah, it is. Okay. I don't drive that much, but 591. Yeah, Texas looks interesting. Okay. So anyway, oil. All right. So we covered oil, and my trade is to short oil, and I'll break. I like to see a break and retest of the 60-65 area, and then I look for zero on oil, right? Yeah. Now, what's going to support oil? Okay, well, why are we going back to zero? Well, I think the frackers are not going to get caught like they were last time. Plus, we're going to be allowed to export, but they're going to be able to export to oil to Europe instead of Russian oil. So that would help us out. We become the new OPEC, I guess. All right. Anyway, let's get to the juicy stuff that you guys have been waiting for, and let's take a look at some of these mini Dow futures YM, right? YM. Now, usually when the dollar goes up and interest rates are up, then the indices get tanked, right? That didn't happen. The market has been resilient against the bond market. It's the stock market is rising, even though no, we had the dollar getting stronger, and with the dollar getting stronger and rates are being cut. So it's like, the US dollar is the cleanest shirt in a dirty basket. You ever like feel like you start smelling the armpits? Like, this is not that dirty. We put it on, right? So that's how the fiat currencies are. It's like, yeah, the dollar is not that bad. Yeah, and people are just rallying behind it, right? And so in the US stock markets are going up because now you have you're looking at lower regulations, lower tax breaks for the corporations, and guess what? Whether you like it or not, you disagree, I don't care because I'm here to teach you guys how to make money and how to put money in your pocket so you can feed your kids, buy those eggs, afford this high ass gas. So I don't, everything else is whatever, blah 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 on podcasts and talking points. I just want to make money off of it, guys. That's all. And use that money to support the kingdom of God. So say what you wish. It's about the love of money is the root of all evil, but money is not evil. So Dow futures, let's walk it down. We got a nice uptrend, higher highs and higher lows. Let's drop it down. We got and we can see this. It's an uptrend. So it's a YM. It's like it's a buy, but you gotta be smart about your buys because you buy here and you get whacked. You want to buy the dips, right? And I'm not calling you a dip. Don't get offended. Don't get triggered. I didn't call you a dip. No, no, dips are the little ice cream things that they sell. They're kind of tasty, right? It's like ice cream doesn't mess up your hands. Um, so there you go. You got these dips, right? And so you might be getting a dip here, right? But let's drop it down. The 4 hour chart, yeah, it's dipping, right? Pull back. And usually after a move, and yeah, like that. We have what we call like a bull flag right there, bull flag. And we're at a Fibonacci area from the low here to the high. Extend that up, and then we're hitting. There's my red line, the 38% retracement. Now it could go a little lower. The 200 simple moving average is down here at 42,969. But right now, the 30% retracement I have is at 41,504. And I would look for a trend line break above this area, like at maybe the 43,000 area, and we could see a move higher, right? I wouldn't short this. I wouldn't short this with your money, right? Friends don't let friends sell support and buy resistance, okay? Or drive drunk, right? So we're at support, and don't be a hero. Don't try to run in front of this, trying to short this, because you're probably gonna get victimized by the short squeeze rally. Retest of the high at 44,584. Not saying it's going to happen on Monday, but maybe Tuesday, Wednesday. Usually we get like a really good rally going into Thanksgiving. So, and Thanksgiving was a week away. So there's kind of a time factor here, right? I mean, we have a shoulder, head, shoulder, we've kind of completed. So, again, I would still, I'm sure I've got some counter trend traders out there, Jeff, counter trend that will just, they might look at this, but we're already seeing on the lower time frame on the 1 hour, we're already finding support, a little bounce at the 38% retracement. We've got this wedge. I'm bullish, Bulls versus Bears. I am bullish YM at the as long as we can stay above 43.58. I'm looking for this to move even back up to 44.584 over time. All right. ES, right? S&P. Look at that. Nice big correction. Same kind of thing I'm going to drop it to the monthly, but look at this. Look at this rally, guys. Look at that. Just a rocket engine straight up. I've been bullish S&P for a long time, right? I said when we got back to this pullback, I said, hey, we're coming to a 30% retracement, guys. Yeah, people going, yeah, we're going to short it down. No, it's not going to happen. 38% retracement, guys. Look, from the bottom to the top, and now we're here. This is like a Drake song. From the bottom to the top, and now we're here. Boom, boom, right? And so we've got this. It's easy when you get this pullbacks. It's not that easy. People are debating. It's gonna go down. It's gonna go up. And everyone's shorting, and then they put their stops here, and then no, right? They're shorting all the way up, and they're getting crushed, right? Because the markets are stop driven, guys. They have to have this is not kumbaya. They want to get the most people on the wrong side of the market, and because dumb money, unsmart money pays the smart money, right? Uh, so it's definitely not a democracy. The majority of people are probably bearish the S&P. It can't go any higher. It can't go any higher. Yes, it can. The market can remain more irrational longer than you can remain solvent, right? I think Mark Twain said that. Uh, there is a 100% expansion, 6,320, 50. That's not too far away, right? But 1.618 is at over 8,066, which is pretty wild, right? I mean, this will be our first target, second target, 7,089. All very doable, right? And if you're not a stock picker, look at the indexes. Look at the triple bull. This is not a trade recommendation by any stretch of the imagination, but take a look at some triple leveraged ETFs on the S&P and stuff. If you don't want to, sit in front of the screen all day and screen jog, look, just get the index, kick it back, and just ride it up, right? I had a friend who's like, you wanted me to trade for him. I go, I don't trade for anybody. And he goes, well, do you have any, tips or something? I go, dude, this was here. It was like October or something. And I said, the industry is like around like 4,000 or something like that. It's probably going to go back up to the old high about 4,800. Just buy, get yourself an ETF and kick back. Don't worry about stock picking anything. You're really busy. You're an artist. You got a lot of other things to do. And yeah, and did he do it? No. He got into this like tax lien, some type of tax liens or something like that. He was going to be a real estate mogul or something like that. I go, bro. And I hadn't talked to him in a while. I go, man, the S&P is at 5,200. How the index go? Oh, I decided I didn't want to do that. I want to do tax liens. I saw this YouTube video. I'm like going, bro, how much did you invest in that? Oh, like $9,000. Did you buy a house? No, because I used all the money for the course. I had no money left over to get even property. I go, okay. Well, that little ETF you got would have doubled up anyway. Eh, anyway, move right along. NQ, right? That's what it's all about. NQ. This is where the party is, right? Monthly chart. Same thing to the you take the Fibonacci, and we were like right there. Beautiful, beautiful. Just move, just decline uphill, right? Came down. I mean, if we took the last major pullback here, or the one before that one, the 38 and the 50 were definitely in play, and we can see how price tested that area, and that was it. That was like the buy low, sell high. I mean, you want to buy here. Buying up here, there's always a risk you could, they get these pullbacks, right? But if you bought here, you're just kind of cruising, you sell a little bit part of your position and you let it run some more, maybe on a dip you buy some more. But the closer you can get into a trade near a significant level of support in an uptrend, your stress level goes all the way down, guys. Buy low and sell high, right? If you buy something at a discount and you see the price drop, I got this really cool um, grill, this griddler, the griddler, it was Cuisinart griddler. Oh my God, it folds out. It's indoor grill. I know. And I make something a waffle. It's a waffle attachment, and then you can make some panini press, right? And I got it. I mean, I got a steal on it. I think I got it for like $12. $12. Okay. It's $99 online. I'm feeling really good, right? $99. I walk by in the store in Target. It's 99 bucks. Hey, I got it for 12 because I'm really frugal, you know. And then I go to the Target and it's $39. They marked it down, right? It took a year for them to mark it down, right? And meanwhile, I just made a bunch of sandwiches, daughters come by and making flipping pancakes and making panini presses, It's like, I can't eat all this food. And then and then I go by to Target, it's $39. I'm like going, okay. But if I had bought it $99 and saw it for 39, I would be livid. I would probably get the receipt and take it back to the store, right? I mean, you just can't knock $60 off of something like that quick, right? Because I'm sure they're coming off a new model with higher, other temperature and settings and things like that. But that's the same in the markets. You bought it, 11,289, you know, and it goes up to 18, it falls to 15. You're not stressing. Say, hey, I'm in here, right? Your cost basis is low. But if you buy it at 18, it's like buying houses in 2008. You bought at the top of the market. And then you feel like crap when it drops. Now you're upside down, and then you got a short sale, and then you get foreclosed done, the mortgage goes crazy. You know, we've had that feeling, right? It's the same thing in the markets. That's what we're doing. We're trying to buy low and sell high. Buy low and sell high. What's low? Well, you gotta look at the charts. You gotta walk it down. Where's the low? These are look. I have look. My red ones are low, right? So in an uptrend, I see red. That's a discount, right? I love discounts. So when I get the long wick like that, people are going, "Oh my god!" I watch the internet guys, and they draw a trend line off, and then they short it, and you go short it. You go to the bathroom, and now you're you're underwater, right? The thing moved against you. Why? Because the trend is up. The pullback doesn't determine a trend. The pullback represents a discount, a value play where you can buy at a discount. So when I see red, I'm not, I'm looking at a discount, right? So if I buy here at the discount, right, and then it goes back up to here, well, gee, I made 2,000 points right there, right? At a discount. Or here, discount, 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 no discount, right? I'm not sure. Well, you could short it. Yeah. And you got stopped out here. You got stopped out here. Every time you try to short this rally, well, I'll just get out really quick. No, you know what's gonna happen? Your phone's gonna go off. You're gonna go to the bathroom. Your wife is gonna come in. Your dog wants to go for a walk because it's got crap all over your house. You go back and you come back and you're stopped out, right? And let me know in the chat box below where simple things. I remember putting a trade on and going to lunch, coming back and being underwater 50 G's. $50,000 for a sandwich, guys. It's like, I don't want to eat this, or going for a haircut, coming back from the haircut and you're down like $10,000. It's like, you know, so I like going, God, as I've gotten older, I used to do some counter trend trades when I could sit in front of the computer and I could be completely focused. But if you don't have that block of time, and you gotta be honest with yourself, if you don't have that time to do that, then and you like short-term trading, just wait for the trend to come back down to you and you can get a discount. And if you short it somewhere in here, it'll come back, right? I mean, if you've got long, it'll come back, right? You got here and it pull back is like the trend will bail you out of a bad entry, right? But if you are going counter trend, the trend will crush you on a good entry or bad entry against the trend. You have to be precise and you have to be on it. And if you're not going to be on it, if you got a lot of distractions in your life, you got like this family Forex, Daddy, can you read me a story? Yeah, I'm hungry. I gotta go to the bathroom. I had a nightmare. I've got 10 standard lots on pound yen right now. Can you guys stop? He yelled at me. You shouldn't be mean. I can't. Does it sound like I'm speaking from experience? I am. I have 30 years of experience, guys, and I can tell you everything what not to do, right? All the mistakes that you can make trading, I have made them. Wouldn't it be worthwhile to sit with me and talk with me and ask me some questions on what not to do to save you 30 years, right? Well, I say like 20, 10 years of that was wandering in the wilderness. The last 20 have been actually really good. So, again, look at the link in the description and, say, hey, mentorship. Type it in the comments down if you're watching me right now on the live stream. Because I'm going to make this I have to, cut it and put it I have to edit it anyway. Anyway, NQ, let's go walk it down. Daily chart. See, got, I mean, and the climb is smaller and smaller. So sometimes when we get these really small increases, we're kind of getting ready to so here we go. Nice 4-hour pullback. Here we go. And we're coming against the 200 simple moving average. So now I'm looking at my chops for the discount, right? Getting a discount, right? Now, but I also have to look at the higher time frame chart too. The higher time frame, the daily is up and everything like that. But there is support here, and there is a little flat area here. So we put a fib on that, take the low to the high, and see. Ooh, now if it starts correcting really super hard past the 618 and 786, this can come all the way down to 20,000 and knock that out, right? So you really want to be careful here. But if we can get above this area, there's a zone of entry where we want to look for price to basically, let's come into play. If it does, then we got a shot back up to the old high, right? But we want to see some strength come in a little bit, right? Some confirmation, trend line break, color change to get us in there. If not, we can come all the way down here to there's a 786 Fibonacci of last resort. That's 20,284. We're currently trading at 20,504. And then there's the Fibonacci's of last resort, the 88.600 radio dial, smooth jazz at 20,154 spot 50. And then there's the 100% full reversal at 20,000 the figure, whole number round number right there, right? Keep track of this. This is a very kind of a deep correction, and we might correct even more on Monday, but look for like Tuesday for that reversal coming in there, right? And then symmetry. We see that symmetry. We just totally blew up to the upside. Now we're retracing all that, and 786 comes in down here. We could probably short it down here. So short-term bearish, 2238. Now I'm going to teach a little Elliott wave here, where we have a little 1-2. Ralph Nelson Elliott was he was an accountant, or he studied 75 years of price data, and he knows the 5-wave pattern in the market. And the 5 waves is like the DNA or the fingerprint of the market. So we have the wave 1 and 2 really small. Wave 3 is usually big and very strong, most powerful wave with high momentum. Then we have a wave 4, right? And wave 4 usually subdivides into an ABC. So we have this 4 right now that we're in, right? And usually after a 4, we see a 5, right? 5 at least to the old high. Sometimes it extends, right? But if we conservative target like that. So this is what I'm looking at. He has a rule. He has a couple of guidelines. He said that where this doesn't work, right? He'll say wave 4 cannot cross into wave 1. So wave 1 is here at 20,271 or so. So price could come back down to here, but if we get a bounce from here and the Elliott waivers, there's guys out there following Elliott wave. There's computer programs programmed for Elliott wave, and they're watching this, and they'll have like something, a little code thing. If price gets to here by, they have the rule in here based on this, right? So we might have a bunch of buyers stepping in, saving it from going. But if it violates and crosses into this area, this where waves 1 and 2 are, then it invalidates the pattern and becomes a very bearish pattern, right? It becomes a bearish alternative count. I know this may be a little, off topic, but I just want to, if you, we use Elliott wave in our strategy, but I can almost create a Greg wave, kind of a bastardization, makes it really easy to understand. That my students have had great success in using it, because if you use Elliott wave by itself, it's very confusing and you'll probably lose money at it, and I would stay away from it. But if we but just on basic, this would be A, B, C, right? And if that's C, what comes after C is 1. And this could be 1, 2, 3, 4, 5, and we blow through all of this, and this will be very, very bearish, right? So this is a very, 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 very important level. This level is so important. This 20,224 is very, because if it violates the rule, what's going to happen is all the people who are programmed for Elliott wave, all the systems and bots are programmed, will short the mess out of this, right? And but if it holds it, then guess what? Those same robots and things that are programmed for Elliott will bounce and take this north, right? So that's why it's a good short to here. Beyond here, that's where it gets tricky. And if it gets below here, then it goes much farther down, right? So we have this alternative count. So I hope that was fairly helpful. Let me know what you thought about that. If it was helpful, type EW in the comments below. If Elliott wave, it was helpful, right? And let's look at Bitcoin. Of course, we cannot be remiss without looking at Bitcoin, looking at crypto. And I'm trying to find a nice chart, and we can see that, all these things are against the dollar, BTC USD. As the dollar starts to strengthen, we start seeing these other assets kind of like, after a big surge, we get a topping pattern and then a drop, right? So we've got on this, that's a 2-hour. And I want to start out bigger, but this is so tasty. I'm just gonna highlight this with the limited time we have left to see that we've got something that looks like a head and shoulders in Bitcoin. After hitting that 91 or 93,518 or so on Coinbase, we have a shoulder, and then we could probably come back down, the way we trade head and shoulders patterns is we take the height from the head to the neckline. We have a neckline, and then we clone that like a sheep there, and then see that will give us our objective, right? And we also can take a Fibonacci as well. And the 38% retracement matches the head and shoulder projection. That trickery. What kind of trickery is this? Right? But yeah, I mean, that would be our target. The invalidation of it, if we can break above the shoulder and make a failed head and shoulder, a break above the right shoulder, 91,856, we can see 100,000, right? But the neckline breaks, look out below, baby. So right here, this is a very defining moment. 3 drives to a top, 1 drive, 2 drive, 3 drives to a top, head and shoulder. It's pretty bearish when structurally you have a higher high, higher lows. Now you have a lower high. You need to confirm with a lower low. And our low is here at 85,103. So if we break through that, then we could come back, and this would be big pullback. Would be an opportunity to get to maybe buy the dip sometime, right? And this is a 2-hour chart. You look at we're going back to our monthly chart. We got this big long wick, big long bar. We got up here and rejected. This is where we were, and then this is where we closed right here. It's 80,000. So, we backed up pretty hard. But look at the nice little pullback there. Nice pullback. All these entries would have been made some really good money there. Weekly chart, nice Then here's our kind of our flag pattern that our pennant that took us out right after the election breakout. Actually, we were breaking out, before that in September. So Bitcoin, I'm actually I'm slightly short-term bearish, long-term bullish, but I think after a big run-up like that, you have some profit taking. You have BlackRock and a lot of these big institutional funds that have been long for a long time. And so they're going to start taking profits. Retail people are going to go, hey, Martha, let's go buy Bitcoin. It's at 91,000, right? Retail people, we go buy at the wrong time, right? We buy what we see, and the markets are more on faith. It's the substance of things hoped for, the evidence of things not seen. You don't see the move, you get in, and then you sell, right? You buy low when no one wants it, and you sell when everyone wants it. But the retail people, the mistake they make is they see it and then they go, oh, let's go buy it. It's like, really? When you go to the store and they have a nice jacket or something, or a nice coat or a purse, do you buy it? Some people do. I don't know. I was raised frugally from people from the Great Depression, so like you always want to buy, when I get a bargain, you don't want to pay full price for anything. Everything's a discount. You know, it's most cultures are like that. They go to the market and they're negotiating for tomatoes. I mean, you want $1.50 a pound for these? Are you crazy? Look at this one. It has a dent on it. How much for this one? You know, there's a negotiation, right? Um, so you look at something like this, you can say, I want a discount. I don't want to pay full price for this. And so once you get into the mindset of looking for value, then you won't get FOMO and you get caught with there's a lot of people that bought it at 91,000. They're sitting there waiting for it to come back. Well, it's gonna go to 100,000. And believe me, I've been there. I'm not trying to make you feel bad or anything like that. In fact, if you're at 91,000, type in me inside the comments below. But I've done that, and I've weaned myself off that to like, look, it's going to come back. Why? Because everybody bought here, they got out, and when they do, they'll start selling. When they start selling, it'll be my turn to jump on the ride, right? I can't get on the roller coaster when it's already left the station. Anyway, guys, that is going to be it for me. Make sure you come over to our Facebook group. That's not my Facebook group. I have a Facebook group. Yeah, called the Live Forex Day Traders group here, the Live Forex Day Traders Den. Come on over to the Den, and it's Facebook groups for the number four, the letter X, and cash, CASH. Come over there, become a member, and we have all kinds of cool articles, trainings, so trading tips, you know, all kinds of charts and things like that, and webinars, and a school. Whoever is absolutely free. Come on over. There's a guide section right there, and we have live trainings. How to select a good broker, moving averages, FOMC interest rate decision, 3 mistakes that traders make, all kinds of this 28 videos library inside of this. So make sure you sign up. I look forward to seeing you there. And also, if you are struggling, you're trading and you want to make money, you see all the big prices moving up, and Bitcoin is going here and gold is going here, and you're missing out. This is probably the most powerful opportunity to trade the markets. I've had so many students move from stage one, stage two, stage three. I've just been so busy, filling out, these certificates. Students, they have they get a certificate of completion, and they've completed, in the trading the demo market, because the demo market is on fire right now, guys. It's like crazy. Look at all these guys, all guys and gals all around the world that I have enrolled in classes. They are closing they're getting their completion certificates. Why? Because the market is so excellent to trade right now. There's all of the indecision and things on the market for the past years are gone. And this is the best time to learn how to trade. So if you don't know how to trade and you want to learn how to trade, make sure you click the link below and find out more. It's called a profit acceleration call, Zoom call. You book a call with me for about 30 minutes, and I can show you how we actually have the compound day trading blueprint. I can show you exactly how it works. And if it makes sense to you, and if you want to move forward to work with me, my goal is to have 1,000 professional traders making money profitable in the market, making, anywhere between 50 and 100, $200,000 a year. We have prop trading partners we work with where you can pass those challenges and start making money right away. So if this is something that you're interested in learning more about, my trading, my time, it's a premium offer. So, you can ask me how it works. Just go ahead and click the link and book a call. And so I look forward to seeing you there on the call. And I look forward to being your coach. And you could be my next success story. All right. This is Dr. Greg